So, good morning, guys. Today we will do the question answers of chapter Money and Credit, chapter 3 of Economics. So, let's start. Explain the terms of credit. Interest rate, collateral, documentation requirement, and mode of repayment are together called the terms of credit. Interest rate. Every loan agreement specifies an interest rate which a borrower must pay to the lender, along with the prepayment of principal amount. Collateral. It is the security against loan deposited by a borrower to the lender. If the borrower fails to repay the loan, the lender has the right to sell the set of collateral to obtain its payment. Example: land, livestock, etc. Documentation requirement. The borrower has to submit their documents along showing with their employment records and salaries to the banks to get the loan. Mode of repayment. An agreement also specifies a method to repay the loan by the borrower. Either it will be repaid in installments or full repayment after the term is over. Next question. What are the two types of sources of credit? Formal sector loan and informal sector loan. Formal sector loan. They work under the supervision of RBI. It charges less interest rate than informal sources. It gives loans only for productive purposes. It does not use any unfair means to get their money back. It does not provide loan to the borrowers without security. Example: banks and cooperative societies. Informal sector loan. No organization supervises the credit activity of informal sector loans. It charges very high interest rate. It gives loan for both productive and unproductive purposes. It uses unfair means to get their money back. It provides loan to the borrowers with or without security. Example: money lenders, traders, and relatives. Why is money called a medium of change? A person holding money can easily exchange it for any commodity for service that he or she might want. It eliminates the need of double coincidence of wants. It is not necessary for the shoe manufacturer to look for a farmer who will buy his shoes at the same time sell him wheat. He can exchange his shoes for money. He can purchase wheat with that money. Question number 4. What are the different modern forms of money? Explain its feature. Modern form of money includes currency, paper notes, and coins. Features. Modern currency is not made up of precious metals such as gold, silver, and copper. The modern currency is without any use of its own. Why is money accepted as a medium of exchange? Money is accepted as a medium of exchange. The currency is authorized by the government of country. In India, RBI Reserve Bank of India issues currency notes on the behalf of central government. As per Indian law, no other organization is allowed to issue currency. The law legalized the use of rupee as a medium of payment that can't be refused in settling transactions in India. No individual in India can legally refuse a payment made in rupees, hence the rupee is widely accepted as a medium of exchange. Question number 6. Explain demand deposits and its disadvantages. People deposit their extra cash with the banks by opening a bank account in their name. Since the deposits in the bank accounts can be withdrawn on demand, these deposits are called demand deposits. Its advantages are: people's money is safe with the banks. It earns an amount as an interest. People also have the provisions to withdraw the money as and when they require. The facility of checks against demand deposit makes it possible to directly settle payment without the use of cash. Demand deposits are accepted widely as a means of payment along with the currency. They constitute money in modern economy. Explain loan activities of bank, or how do banks mediate between those who have surplus money and who need money. Very important question this is. People deposit their extra cash with the banks by opening a bank account in their name. Banks keep only a small proportion of their deposit as cash with themselves and use major portion of a deposit to obtain to extend loans. Banks mediate between those who have surplus funds called the depositors and those who are in the needs of funds called the borrowers. Banks charge a higher interest rate on loans than what they offer on deposits. The difference between what is charged from borrowers and what is paid to depositors is the main source of their income. What is credit? What is its need in rural areas? Credit. Credit refers to an agreement in which the lender supplies the borrower with money, goods, or services in return for the promise of future payment. Its needs. In rural areas, the main demand for credit is crop production. It involves the costs on seeds, fertilizers, pesticides, water, electricity, repair of equipment, etc. The credit is required only for 3 to 4 months between the time when the farmers buy these inputs or when they sell the crop. Repayment of the loan is dependent on the income from farming. Next question. Explain the positive role of credit with example. The shoe manufacturer received an order for 3000 pairs of shoes which has to be delivered in a month time. He has to hire a few more workers for stitching and pasting work. He has to purchase the raw material. He also asks leather supplier to supply leather and promise him to pay later. He obtains loan in cash from the last trader as an advance payment for 1000 pairs of shoes with a promise to deliver the whole order by the end of the month. So here credit plays a positive role. Explain the negative role of credit with example. Credit in this case pushes the borrower into a situation from which recovery is very painful. A small farmer took a loan from the moneylender to meet the expenses of cultivation, but her crops failed by the hit of pests, which made loan repayment impossible. So she has to sell the part of the loan lender to pay loan. Now her condition was much worse than before, therefore credit plays a negative role. Next question. In what ways RBI supervises the functioning of bank? Why is it necessary? Or which organization supervises the functioning of formal sector or formal source of loan and how? The Reserve Bank of India supervises the functioning of formal sources of loan. RBI sees that the banks give loans not just to profit-making businesses and traders, but also to small cultivators, small-scale industry, to small borrowers, etc. RBI monitors the bank in actually maintaining the cash balance. Periodically, banks have to submit information to RBI on how much they are lending to whom at what interest rate, etc. Next question. Why do banks and cooperatives need to lend more? Or analyze the role of credit for development. Banks and cooperative societies need to lend more because this would lead a higher income, and many people could then borrow cheaply for a variety of needs. They could grow crops, do businesses, set up small scale industries, etc. They could set up new industries or trade in goods. Therefore, cheap and affordable credit is crucial for the country's development. Question number 13. Poor households are still dependent on informal sources of credit. Why is it so? Banks are not present everywhere in rural India. Even when they are present, getting a loan from the bank is much more difficult than taking loan from informal sources. Informal source lenders such as moneylender, on the other hand, knows the borrower personally and hence are often willing to give a loan without collateral. The borrower can, if necessary, approach the moneylender even without repaying the earlier loans. Question number 14. What is the basic idea behind self-help groups SHG for the poor? It is also an important question. The idea is to organize rural poor, in particular women, into small SHG and collect their saving. A typical SHG has 15 to 20 members, usually belonging to one neighborhood, who meet and save regularly. Saving per member varies from rupees 25 to rupees 100 or more, depending upon their ability to save or people to save. Members can take small loans from the groups itself to meet their needs. The group charges interest on these loans, but this is still less than what the moneylender charges. Then, sixth point. After a year or two, if the group is regular in saving, it becomes eligible for availing the loan from the bank. Next question. This is also an important question. What are the advantages of SHG, or how do SHG help the borrower to overcome the problem of lack of collateral? The SHG help borrowers to overcome the problem of lack of collateral. They can get timely loans for a variety of purposes and at a reasonable interest rate. It helps women to become financially self-reliant. It provides a platform to discuss and act on a variety of social issues such as health, nutrition, domestic violence, etc. With that, we the end of question answers. We ended the question answers of chapter money and credit of economics. So bye bye for my and wait for my next video. Thank you.